Alright everyone, welcome back to the channel for another update on Bitcoin. So, in my most recent videos for Bitcoin next move and the emergency now, we've been focusing on the lower time frames, and I've been letting you know why I think in the immediate short term, Bitcoin is coming down to take out its quote-unquote bear market lows. This is a target I've got my eyes on in the short term, 17,300, but for this episode, I don't want to focus on the day-to-day volatility on the lower time frames. What I want to do is clear up our chart, head over to the higher time frames, and check out what's going on with the Heikin-Ashi candle. So with that being said, let's dive right into today's video. If you're new to the channel, warm welcome. You might be wondering, what are these Heikin-Ashi candles? How are they calculated? Why do traders use them? There's a lot of questions you might have on these, and especially why they look like this. So if you're looking for a more in-depth explanation of how the Heikin-Ashis work, how they're calculated, how to use them, I definitely recommend heading over to my channel, clicking on playlists, going over to the educational series, and you can see it's about 10 episodes down, how to Heikin-Ashi candles, a 5-minute video. If it's not in there, you don't need to know it. So with that being said, why do traders use Heikin-Ashi candles? I'll give you a brief overview. Well, traders use Heikin-Ashi candles because it smoothens out the trend, and because of the way they're calculated, they're very useful in technical analysis. As you know, I'm sure all of you know this, but Japanese candlesticks, they open where the previous one closes. So as you can see, when we're red, the next one opens and we open right at the bottom, and when you're green, the next one opens and we open right at the top. However, with the Japanese candlesticks, it doesn't matter what color you're in, doesn't matter what direction you're in, Heikin-Ashi candlesticks open approximately halfway through the previous candle body opening, and subsequently, when you look at these, it takes a lot more momentum to make a downtrend turn bullish, and it takes a lot more momentum to turn a uptrend into a downtrend. Now, if you head over to the Japanese, you can see if you were trading on the Japanese candlesticks purely based on, what color we were at that moment in time, you would have been faked in and out and in and out and in and out of the market as we go red, green, red, green, red, green. However, if you were looking at things on the Heikin-Ashis, and bear in mind as well on the bull run, you can see there was a plethora of times where you were just going between red, green, red, green, and red, green with no direction. However, Heikin-Ashi candles, you can see this downtrend was pretty well called. This uptrend was beautifully called. The bear market was beautifully called. And if you were buying the breakout on the monthly Heikin-Ashi candles of the Bitcoin 2018 bear market, you would have been buying at $4,300. So a lot of people think you need to get your buy orders set now. A lot of people think that if you're not, religiously DCAing on the entire way down, you are going to miss the bottom and you'll never be able to buy this cheap. However, even using something like the monthly Heikin-Ashi candles, which took 1, 2, 3, 4, 5 months to snap into bullish territory, finally calling for the start of the bull run, you were only buying a 39% increase from the absolute bottom. And you might be thinking, well, 39% increase, that is absolutely insane. Well, it's not too much, and you can still see we went up 1,500% from that high to that low. And as you can see, I mean, if we did look at this, you did go up 2,000% if you caught the exact bottom, but unless you've got a crystal ball, that might not be in the books for you. So let's head over to the higher time frames first, and let's work our way down. So on the 6 monthly time frame, there's really not too much to update. I don't want to draw too many conclusions based on the previous cycles looking at the bear markets in terms of the Heikin-Ashi candles, because like I said, the way Heikin-Ashi candles are calculated is that they take a lot of momentum to move them to the downside. So I don't think looking at something like the 6-month Heikin-Ashi candles is going to help you call the bottom whatsoever, especially when something like the 2018 bear market lasted a long time. But because the first amount of it took a decent amount of time to taper down, it didn't actually look like it lasted that long, but nonetheless it absolutely did. So the 6-month time frame, really not too much to talk about over here, but it does look like we are getting a bearish engulfing candle coming down on us. If we head over to the 3-month time frame, once again, very beautiful. You can start to see that this is looking a lot like the previous bear markets. Now over in the 2014-2015 bear, you had 4 sets of 3-month candles in the red on the Heikin-Ashis before you had the bottom. Now over here you can also see we had 4 before you had the bottom. Well, technically you had 3, but because of the direction of the trend, and once again because of the way these are calculated, they take more momentum to push them to the upside. It took about 4 months before it was saying, hey, Now is the time to buy. Right now, it clearly seems like with the bearish engulfing candle, it doesn't exactly look like we're getting these big buybacks that we've previously seen on Heikin-Ashi candles when the bottoms were in. So, I mean, unless you believe that the 17.5 bottom was in and subsequently this buyback was juicy enough, I just don't think there's much evidence per se to argue that the bottom would be in at this moment in time. Now, let's head down to the lower time frames. Now, this is what I highlighted at the start of the video. If you're buying these breakouts or if you're buying the breakdowns on the monthly Heikin-Ashis, you're really not missing out on too much. For example, if you sold the 2018 bear market or you sold the 2018 bull market high, instead of selling at 20,000, you would have sold at 11,000, which is still better than holding on to 3,000. So maybe that was not the best example, but then once again, you can see it honestly, I mean, if you were selling at the exact top of these Heikin-Ashis, you would have missed out on a 69% drop to the downside. If you were buying when these Heikin-Ashis turned green, you would have had a 1,500% run to the upside, and then you might be looking at these intraday things. But then even from then, you know, if you were looking at these Heikin-Ashi symbols and then once again selling until you see that first green, and then if you were in that green, I think this was the only one that didn't work out. This one actually went down 5%, so you would have lost 5% on this one, but then on the next call, it would have basically made you another 700%. So you can clearly see, you know, buying these breakouts, waiting very patiently for the monthly Heikin-Ashis to break out is not a bad plan, and it is something that I'm going to be keeping my eyes on. There is going to be a small amount of capital that I've got reserved for very bearish price targets like 8K, 9K, 10K, 11K, 12K, 13K, which I've previously highlighted that I don't think we're going to, but nonetheless, it is important to have a small amount of capital at those lower levels. The largest amount of capital that I have is round about that 14K region, but I am also aping in at 16K. So don't think just because I've got buy orders at these dramatically lower price targets, I actually think we're going down there. I just want to make sure that I'm prepared in case there is a huge scam wick down below. But nonetheless, if we don't have that scam wick and we do come down to say something like 16K, 14K, and we hit most of my buy orders, and then the monthly Heikin-Ashi candles start to turn green, that is when I'd use the rest of my capital that hadn't yet got hit on those DCA orders, and I'd use that to deploy capital in the markets. Now, once again, just quickly summarizing the monthly time frame, it clearly seems like we've got more room to move to the downside. Now, I haven't actually looked at the bar patterns for the monthly Heikin-Ashis, but let's overlay and see how similar these were. So let's connect the peaks. I don't know why whenever I do these bar patterns, they like squeeze down so much. But let's copy and paste this with the correct scale. And you can see, I mean, we're following right on trend with where we've been in previous markets. And, you know, you can't make this up. Look at this. This would be where that flat support is that we're sitting at right now. And you can find this flat support all the way back to Bitcoin's previous all-time high, around about this 20,000 region. It looks a little bit more ugly now that we're on Heikin-Ashis and we're on higher time frames, but nonetheless, it is what it is. But as you can see, the next couple of months, the Heikin-Ashi candles are predicting a move down. This does not predict specific price targets because you do have to remember you are just copying bar patterns and you've got things to contail like the logarithmic growth curve scales, but these are really used to identify round about when we're going to bottom. Obviously the tops are retroactively fit, and then it gives us a good idea of the waves, so the peaks and the troughs in the markets will be called, but not exact price targets. So while the bars are down here at 11K, bear in mind this is absolutely not calling that we're going to move down for 11K. If we remove this, once again just highlighting that the monthly time frame seems to be beautifully lining up. If we head over to the weekly time frame, you can actually see that we have started to turn up ever so slightly as we are at this 20,100 region. Now, I will have to actually go over to another chart because the BLX for some reason does not update as frequently as the other charts. So let's just double confirm that that green Heikin-Ashi is still here. And yes, you can see that if we are closing, or sorry, if we are trading around 20,900 at / below 20,900 when the next weekly candle body opening comes on Monday, we're going to be back in a negative trend for the Heikin-Ashis. Now, as you've sat through the majority of this video, you should know what it entails to put in a red Heikin-Ashi candle after you've been in a green uptrend. These are normally beautiful calls that more downside momentum is going to be coming, and it looks like we're right on the verge of starting our next trend to the downside. But once again, my bear market low price targets are right here and right here. 16,000 and 14,000. That's where I think we're going. So all I've got for you for this episode, my friends. And as always, cowboy out. Peace.